The following is how the big, beautiful bill affects the child tax credit. So, if you don't care about how our tax system's laid out, if you don't care about the children or the child tax credit, then this video is not for you. You can keep scrolling on. My name is Paul Vasquez with Tax Lab. We want you, and you need to become an ethical millionaire. I'm reviewing the big, beautiful bill so you don't have to. Here we are, big, beautiful bill. Once again, I've downloaded a version of it, the most recent, the most accurate, from what I understand. You can go and get this for yourself. Go to congress.org and look for this H.R. 1, big, beautiful bill. And here it is in all its glory for you. So the item number that deals with the child tax credit is right here under the finance title, subtitle A, tax. And it's under here, chapter 1. Let's zoom in on that, 70104. And we're gonna just type it right in here to the little search bar. Make it easy to find it in the document. Click on down. And now we are here inside the text to learn more about it. So you're welcome to follow along there. I'm not gonna read through it line by line. You can do that on your own, but let's get into the highlights. So the Tax Cut and Jobs Act increased the child tax credit for those within a certain income bracket. So you need to earn some money. I think last time I did the calculation, it was about $8,000 of earned income in order to qualify for the child tax credit. So you have to have some earned income to begin with. And then next, you have to have some qualified dependents for the child tax credit. And then you can't earn too much. If you earn too much, kind of kicks you out of the child tax credit. I believe it's around 45, 46, and it goes up every year. So, as inflation goes, so do these brackets. And they've kind of added that into the standardization of increasing the child tax credit as we move along. So right here, they're going to bump it up, if you see that, to $2,200 pretty much right away, starting in 2025. Or nope, sorry, before January 6, 2026, it looks like 2025. So for this next tax year, we should see this bump up, if I'm reading this right. Now, once again, as we've seen in some of these other amendments, they are taking away the ability or codifying the rules that you have to have a social security number. Now, what's interesting here is that in this, it seems to just indicate that at least one spouse has to have the social security number. Let me show that to you. So if you look here, 7A and that first little I says the taxpayer's social security number, or in the case of a joint return, the social security number of at least one spouse, and then the qualifying child as well. So this does not exclude then married couples who one spouse is not a U.S. citizen or not is under a ITIN. So legally married, but one spouse has an ITIN and not a social yet. So they could be, doing the whole nationalization process after being married. They've got a U.S. born child. As of now, this is where the rule kind of stands regarding the child tax credit, and at least one spouse has to have a valid Social Security number. Now, one thing a lot of people don't realize about the child tax credit is that it's kind of split into two sections. First, it goes against your taxes. So if you have what we call tax liability, meaning that your income after the standard deduction, after the standard deduction and the QBI, you have taxable income, and that taxable income gives you a tax. If that tax is already over the $2,200, well, you're not going to see any money back because that just pays off the taxes. Now, if you have other withholdings that you've had, right, first, what's going to happen is it's gonna go against that tax liability. So if it soaks up all that $2,200, that's it. You're not going to see any more back. Now, if you've had additional withholdings from your paycheck or anything else, you could get that back because now the child tax credit absorbed the taxes that you would have had to pay otherwise. And now here's a little bit of a gotcha that is a little bit different in that they've created a maximum amount that you could be reimbursed. So let's say your tax liability is zero, right? You get to that point, you have earned income, but you're maybe under the standard deduction threshold. So you don't have any taxable income, but you have earned income, but you just don't have any taxable income. And so you say, well, I'm getting that $2,200 as a refund. No, you're not. That $2,200 goes against any taxes you have. If you have zero taxes, you don't necessarily get all that back. And this is where it bumps into what they call the additional child tax credit, and that comes back as a refund. Now, in prior years, it would be whatever overflowed from that, meaning that if you had zero tax liability or if you had some tax liability, but the child tax credit didn't absorb it all, then you could get the rest back. They've capped that. So if you have enough earned income to get the child tax credit and not too much to be knocked out, and you have zero tax, you're not getting back the $2,200. They've capped it out at a lower amount. So starting off, it says the maximum amount of refundable credit after 2024 is $1,400. So that means 2025, right? Is $1,400. Right there, $1,400. That's a maximum amount of refundable credit after 2024. So this year, 2025, is $1,400. So if you have zero tax liability but enough earned income to get the child tax credit, the maximum you could get refunded to you is $1,400 per child. Now they're going to adjust both in the rule here, they're going to be adjusting these numbers according to inflation. And they're going to bump it up to the nearest $100. So let's say inflation was 2.5% from 2020 for 2024. So that would go up possibly 2.4%, which isn't quite $100. So they might have, it's probably going to start at the $1,400. But this is an example of how it would work if in 2025 we have inflation. Right. So how it would work is that once you get once that bumps up over 50 cents, if inflation is more than 50 cents, it's going to bump up to the $1,500, but then it's not going to bump up again. It'll remain constant until inflation from that $1,400 reaches up to $1,550. Right, so you'd have to have more than $100 of inflation to bump up another $100. That's how it's probably going to work. But they are going to adjust both the child tax credit and how much you can be refunded according to inflation as time passes, unless they change the rules again. So if you want to plan, if you want to figure out how all these rules apply to you specifically, that's what we're for. Tax Lab, lab.tax. Click on Advisory Services. Get a free 15-minute introductory phone call to see if our advanced packages are right for you. If not, keep listening.